This is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at the technical charts and try to understand what happened in the market during the day and plan for a better trade for the upcoming day. That's tomorrow, February 7th, Wednesday, 2024. So we had the indices that were moving in opposite direction, basically Nifty and Banknifty. Nifty was trading up and Banknifty was showing weakness. Is the bank going to spoil the party? Let's try to find out. There's a wrap up of it. Take a screenshot if you want to refer it. But before that, we would first go right to the charts. So we'll disable this plain cancel. This is what happened in the Nifty today. In the green, with a small wick on the bottom, which showed that in the beginning it was not that great. So this is what happened. The 5 minutes you'll understand. Right. So today's move was trending up, but in the beginning half there was some volatility. That's what the big size is, and then it was trending up. But contrary to that, in the Bank Nifty we have a bearish candle, hammer, red hammer. It does not have any particular significance at this point because neither in the uptrend nor in the downtrend. So the big size indicates that there is some support there at the 100 exponential moving average. But if you look at what happened in the Bank Nifty intraday, it was mostly range bound with a bearish bias. But Nifty, it was not range bound; it was trending up with some volatility. Right. So that's a kind of move we have. If you look at Nifty, we can see that there was a retracement of 4.5, just 0.5 after a big rally of 30%, 31%, with multiple breakouts and all that. Finally, it ended up at just 4.5% correction and then completely recovered the reversal, made new all-time also. Then some selling pressure came for one day, just one day, and today it is back in action. And it's definitely trying to make a new all-time high and further up. But the problem is in the Bank Nifty. That's where the volatility is there, that's where the weakness is there, that's where the deeper cut correction is there. You can see that it is still not come out of that box, just going up and down in that range. And today it has become even more bearish than yesterday and day before. 3 red candles so together. But you see that it managed to close above the 100 exponential moving average. Right. So if you closely analyze, you can see that it had already reached that blue, then bounced back, entered. Now it is taking the support at the bottom of the blue, so as not to slip back to the yellow. Right. So if it falls back to yellow, then it could retest 200 exponential movement. So that's the scenario. So if you look at the resistance support levels, we study that, you can see that definitely 22,000 will be the major resistance. Next is just 75 points, so it's already cleared multiple times. And after that 22,126, which is the all-time high that was hit few days back. And then after that it can go as high as 22,500 for sure. So at every counting number we have resistances. That's what you would say. 200, 20, 200, 22, 250, 200, like this. Every 100 or 50 would have small resistance because of rounding. That's what we can figure out. And also we can figure out what is the width of this channel. That much move can happen. That also could be around 22,500. Downside support major one will come at 20 exponential moving average, which is at 21,640. Before that 2,500 is there, surrounding number, so there could be some support there. If 2,500 and 600 is breached, then you come to 21,350, which is a Fibonacci 23.6 retracement. Then 50-day EMA will come at 21,250. Then you have the 21,000 and 29,50 gap. So that's the supports on the downside. Right. And if similarly, if you see, resistance will be to come out of this box eventually. But before that, you have to take the hurdle of 20 exponential moving average and 50 exponential moving average is coming at. It has lost the 46k. So right now. So it has to climb back to 46k. Before that, there is a hindrance at 46,165, which is 20 and 50 exponential moving average. After that 46k, then you would have to clear the 47 and 100 and 47,000 rounding number. So it has to come out of this 47 to 50 to come out of the consolidation zone. That is where it decisively shows that it will be moving further up towards the blue channel top. Right, downside, first support will be 45,370. Before that, expansion moving average support will come at 45,650. 100 expansion. If that is breached, then Fibonacci retracement 58.45 would come. If that is also breached, then 20 expansion moving average, 200 expansion moving average will come. Sorry, 44,668. That is breached, it goes to 43,960 and 44,000. That zones. Right. So any breach of this 200 moving average and that swing low at 44,450, that is breached, we may have trouble. You have to be cautious about that, right? So it's very crucial that Nifty holds on this blue channel bottom and does not slip down, and instead consolidate here, takes its own sweet time, and then slowly moves up, taking on the 20 exponential moving average upside and so on. So got to keep a close watch on those. So let's just quickly get back on the wrap up. So it's a 158 points and 0.70% up move and a close above 21,900 that has happened on the Nifty. While it's opposite, it's a flattish negative 0.29, 135 points down, close on the Banknifty. It's formed a red hammer, the bullish candle is formed on the Nifty. So Nifty was corrected very little, 4.5 after a very good rally of 31%, but Banknifty had only 26% of rally. It has corrected deeper, 8.5, and it's weaker. The close below 46,000 basically. So it still has no close to 2050 expression and all that. But remember, we're in the middle of a bull rally. Basically, until it proves that the momentum has dipped in the bear zones and then both the indices stays there. That has not happened yet. So it is absolutely strong and then bouncing back just like that, right? Booking a profit and the next day bouncing back, but Banknifty unable to move and sustain whatever gains it makes as a scenario. So far as being buyers of 500 crores in cash yesterday after continuously selling for several days. The buyers, surprisingly, that means yesterday's down move was just profit booking by the mutual funds or domestic institutions. Today's data has not come in. But definitely institutions, size of them might have sold. That also come into this, right? So institutional support is not that great. It's a reason why the market is unable to sustain, especially the sell-off is happening in the banks, right? So levels are not repeating. We'll go back and then see that if you wish to. But the momentum has been sideways and it's rising. It's still not bullish, remember that, Nifty in daily charts. And Nifty is also sideways, but it's in the opposite direction, it's falling. The momentum is falling and it's still in the sideways. So overall sideways, but momentum is also moving in the opposite direction. So that's if you see, but trend also is the same. Trend is bullish, maintaining the bullishness, the weak strength in Nifty, but it has fallen crossed over to the bear zones in the Banknifty with the falling strength. It's slightly bearish and slightly bullish on Nifty. That's how it is with respect to the momentum in the daily charts. There is a spike of 1% further, so it's at 15.78. Be careful. It's actually no more in the low volatility regime. It's getting into the medium or high volatility regime. So better be cautious about that. Cut short position size if it hits the 20. Manage your risk and cut short position size. That's all it can be done because market can be too volatile to handle unless you are a professional trader. The bands, so the reason why the VIX is rising up is the fear of the market, the fear of the heights. Basically, the market has run up too much, but the banks are unable to recover. It's probably the fear that that is seen in the India VIX options data. One demands is also divergent. So several things that is divergent. Divergent in the sense the indices moves in opposite direction with respect to price, with respect to momentum, with respect to Bollinger Bands, with respect to trend indicators. Every way it is divergent. Bollinger Bands in the sense that it's expanding on the outside on the upside in the case of Nifty. Let's just enable that Bollinger Band. So you can see that the expansion of the Bollinger Band is happening, which indicates further up move. But in the case of Nifty Band, it's not expansion, it's contraction. Continue to be sideways further less indicative of Bollinger Bands. So one is showing it sideways, one is showing its expanding upside. So that way also it's a stronger Nifty and the weak Banknifty that we're seeing there. So definitely the momentum is lost, but Nifty has quickly got it back and still sideways, not at moves but trending up, rising up in the momentum and then crossed out to the bullish in the weak strength. So Banknifty on the other side is momentum falling, bearish trend, and then so overall this is the nutshell, this is the crux. So Nifty is now going back to the place where it got resistance 3 times. It failed 3 times. It's going there tomorrow probably for the 4th time. So there is a chance that there can be resistance there definitely at the all-time high level is above the 22k, and it could be a double top and pattern fall possibility probability. So be careful unless you get a green candle close above the all-time highs, previous all-time high, right? Especially because of the fact that the banks are not supporting, right? If you look at the major indices, you can see a green except the FMCG, and all sectors are green. Now if you look at the momentum on the short term, all sectors are bullish except for the FMCG. So across the sector there is nothing wrong, right? Everything looks fine from the momentum perspective. And today definitely across sectors everything is green. So that's a positive thing. Now if you look at the heavyweight stocks that contribute max to index, you can see that it is close red. All of them are close red except for the INDICES and its IT stocks which did well today. And then Nifty moved 12.5% and TCS moved 4% or something. So that was a big move. So IT did well and ICICI Bank also closed green. Otherwise it was alright. So sell-off has happened from the institutional side on the heavyweights today. That's for sure. The data does not come out saying who has done that how much. But if you look at the heavyweights momentum, Reliance, Infy and the TCS are market leaders now. They're having bullish momentum. It was out sideways, and 2 of them, the HDFC Bank and the ITC, is bearish. So it was IT rally that happened today that the market will that IT is as supportive as today. Then we'll have to see because there is some red on the US indices. So you have to be careful about that bank as well. Another good reason for a double top breakdown that could potentially come in if the banks are also supporting and IT also goes wrong. So US indices are right at the top and the all-time highs at level. Oil is spiking up. The base become weaker. Crude oil is spiked up. Gold also is spiking up, but crude oil is consolidating with a spike at the bottom and gold is consolidating at the top. So the dip is a buying opportunity as far as an investor is concerned. Good quality stocks and small chunks. But as a trader, the direction is sideways, both indices for sure. But bank is having bearish bias, so I'll be applying the strategies accordingly, as I mentioned every day. So tomorrow the Banknifty expanding the levels of, look at that, 44,000 and 48,000, such a wide range, 4,000 points range. That means stocks and riders for tomorrow's expiry has no clues. Yeah, so that's what happened. Right? So expiry the Banknifty. Its put call ratio is bearish. Actually, futures open list also showing short build up. So overall Banknifty subscribers are hoping that there will be very volatile expiry tomorrow, and it's bearish the build up in the futures OI and the options OI. That's wrap up. Play it safe. VIX is rising, volatility is rising, banks are weak. Be careful and protect your capital. Have tight stop losses in intraday traders and have hedge strategies and no naked call buy, sell, whatever. That's all. If you're watching this and then not subscribe, please subscribe and share to your friends and colleagues, and then so that it reaches out the max, right? So thanks for watching. Happy trading, happy learning, happy investing. Bye bye.